Oh, great. Good afternoon, everyone, both of you here in the room and the online participants. My name is Nikolas Scherer, and I'm leading the policy and advocacy work of the Anticipation Hub. And I'm joined here by my co-facilitator. Maybe you want to introduce yourself.
Right. So I'm Stella Shumba. I'm a senior research associate at the Munich Climate Insurance Initiative, which is hosted under the United Nations University in Bonn.
Right, fantastic. Yeah, together we have the privilege to co-facilitate today's session on experience how to adapt disaster risk financing instruments to fuel anticipatory action. And I mean, as you all know, extreme weather events like floods, droughts, storms, heat waves are not only becoming more frequent and intense, but these hazards also disproportionately impact the most vulnerable populations, particularly in fragile and conflict-affected settings, and the recovery windows are basically, continuously shrinking. And each shock basically chips away the hard-won development gains. And yet, of course, amid this growing risk, there's also a tremendous opportunity. Thanks to advance in forecasting technology, we can basically predict a lot of these hazards like droughts and floods and cyclones with increasing accuracy. In other words, there's no need actually to wait until a disaster strikes, but we can act ahead. And this is precisely where anticipatory action comes in. Now, anticipatory action is it's an increasing popular approach also. And as you might be aware, it is still predominantly financed through a narrow set of humanitarian financing mechanisms, particularly also grants and contingency funds, and remains heavily reliant on a small pool of international donors, which basically limits also the scalability and the long-term sustainability, and particularly also when you think about, in the current situation. So this is basically why today's session is centered around a key question: how can we adapt and leverage disaster risk financing instruments, in particular insurance instruments, to better support anticipatory action, and thus maybe also contribute a bit to the proposed reset of the humanitarian system. Now, the linkage between disaster risk financing and anticipatory action is still really in its very, very early stages. So there are basically, at least to our knowledge, only a handful of examples out there globally. And of course, they demonstrate, and we will see that in this session, that this connection is not only possible, but holds sufficient or significant potential. And but more importantly, we can also draw very valuable lessons from these pioneers so that we can scale up. And in today's session, we'll basically look a bit closer how insurance instruments have been used to fuel anticipatory action, and specifically highlight what we can see as maybe emergent practice. We will also have a closer look at the persistent challenges, and I'd like to pick all your brains basically how we can address them in the future. So the session is basically divided into 3 blocks. So first we will hear from Gloria Womitso. She's Senior Technical Underwriting Analyst with the African Risk Capacity. And so welcome. And Akata Taito, she's online. If you can just quickly wave to the camera. Brilliant. She's Inclusive Insurance Solution Hub Coordinator for the joint UNCDF UNDP Pacific Insurance and Climate Adaptation Program, and they will share their respective experiences in linking insurance with anticipatory action. Second, then Stella and I will present the preliminary results of a comparative study that we are currently conducting, which highlights these different pilots on that link anticipatory action and insurance. And third, we will then open the floor for an open discussion on potential ways forward. And also pleased to welcome Emily Montier. If you could just wave, thank you. Yeah, Emily will help to kick off the conversation. And she's an independent consultant, but has been long active in the anticipatory action DRF space. and working with institutions such as the START Network and the World Bank. And this is part of the session where I would like to pick your brains. One last thing before we get started, if you do have any questions to the presenter, in particular now addressing the online audience, please put them directly in the chat. So we'll have a little Q&A bit after each presentation, so we can take up these questions. If there's not sufficient time, we'll put them at the end, so please direct them at the speaker. And with that, I'd like to invite basically Gloria for her presentation on the African risk capacity and the anticipatory insurance. It would be great if you could tell us a bit more about how the instrument work, what function, what role it has in the larger structure of ARC, and particularly also what practical steps you did to develop this and the challenges you faced or are still facing. And for that, over to you.
Thank you so much, Nick. Maybe we can move to the next slide.
Oh, okay.
Yes, you can.
Yeah.
Thank you. So I think, first of all, it could be great to just maybe try to explain quickly what is ARC, what we're doing, because most of the time it could be challenging to just understand how the insurance fits themselves now doing anticipatory action also. So ARC is a special agency of African Union, established to really help African governments to improve their capacity and to better plan and respond to weather climate events. And also we assist them with food security issue. And I'm part of ARC. ARC is a group. Maybe we can, let me just see.
The slides are, you can just, the next slide.
Okay, great. Yeah. Next slide. Thank you. This one is perfect. So ARC is a group composed of African Risk Capacity ARC Agency and the insurance part are ARC Limited. So ARC Agency is really, the mandate of ARC Agency is really to manage and do the political engagement, since we are really managed by government, African Union government. So it's managed by member states where we provide guidelines, oversight, capacity building, operational monitoring. And ARC Limited will come really to do the risk transfer. So we are a regulated commercial insurance company, but we are not a traditional insurance. We are really development recognized like development insurer. And also we have the statute of non-profit charity statute in Bermuda. What we do at ARC Limited will really be the disaster risk financing function, transfer risk to market, and also other financial functions such as asset management and contingency reserve. Next slide, please. So we have 5 expertise. The first is really the expertise in climate risk assessment and expertise in disaster risk management. We do parametric insurance and reinsurance, contingency planning, and also we do a lot of fundraising because it's something that we notice is important to support our member states, and premium financing as well. But most important, the capacity building. So we intervene at different levels. We have macro, really providing solution to address liquidity gaps for government, provinces, cities, and development partners. But also at meso level and micro. For at meso level, it will be for aggregators such as agribusinesses and financial institutions. And at micro level, we will work directly with small order farmers, producers, and individual through local insurance companies. And all these objectives is really to ensure that the business continuity and income protection. Next slide, please. Yes, so the different hazards that we are covering at ARC are really the drought, where we have crop model, but also pastoral model. We have tropical cyclones, we have floods, and also outbreak and epidemics. Next slide, please. I was explaining earlier that we do parametric insurance and not traditional insurance. The difference will be really parametric insurance will be based on trigger event, predefined triggering events. So we will know before even the season starts what will be the coverage, the payout that the country or the institution we are working with will receive. And the parametric insurance makes sense when traditional insurance is not accessible or affordable. So it's really the one you will be hearing most used when it's climate risk events such as cyclone, drought. And it's also come as complement to traditional insurance, but not as substitute. And this offer immediate payout because this is what we want to do actually, even in anticipatory action. We really want to have something where we pay directly as soon as possible. So then action could be taken. We can move to the next slide, please. So for our anticipatory, next slide, please. Next slide again, because it's taking time. Next slide. Next slide. Perfect. So, oh no, sorry. Then the slide before. Thank you. So here I put the example of Malawi because for our anticipatory action project that we have developed, we did it for Malawi and Zambia as pilot countries. So normally the traditional insurance or traditional, just the agricultural season in Malawi starts in November and goes up to May. So that means the payout will come normally at the end of the season. But in the case of traditional on anticipatory action, we will pay way before. So we can move to the next slide. Next slide again. Next slide. Next slide. Next, so we can have everything. Next slide again. I think it's not over. Yes, perfect. Thank you so much. So here and now I will talk about the anticipatory insurance policies that we have developed. So climate change is increasing not only temperature, but also the variability of weather, giving rise to longer and more intense drought. But the current system for responding to the disaster is often not sufficiently timely, efficient, resulting in significant losses to the poor's livelihoods. And in addition to having tool and threshold triggered by different humanitarian organizations, we thought that having also an anticipatory insurance policy is more than necessary. And this is where ARC can generate a significant beneficial impact on how disasters are being managed. So in the past, our traditional drought insurance was only focusing on post-disaster response, disbursing funds only after drought or cyclone or flood materialized, often too late for early intervention. So what we did is that we partnered with the UN OCHA to develop a model that released funds earlier based on forecasted drought condition. So we started just for drought, but we are also working on developing something for flood. And with premium subsidies provided by German Development Bank, we have piloted our first anticipatory action insurance policy, as I mentioned earlier, for Zambia and Malawi. It was 2 years ago, and it's still ongoing because these two countries have renewed their anticipatory action policy for drought this year. So the season ongoing 24-25. It's important to also note that these two countries also have the traditional insurance policy. So the objective of our anticipatory
Yeah, thanks everyone. I'm aware we've lost the room, so I'm just going to try and get them to reconnect. Please bear with me. Hey everyone, thanks for your patience. I'm in touch with the room. We're just trying to get the computer that was running the session reconnected. Please just take a moment and we'll be back online as soon as we can. Sorry about the misconnection. Here we go. Nico's just let me know we should be back up and running in 2 minutes. So if you want to use this opportunity for a comfort break or to grab a glass of water or a cup of coffee, please do. So we should be back on by 23 minutes past. Apologies.
Okay, can you hear us again?
Yes, we can hear you. Thank you.
Apologies. So somehow the cable fell off. I don't know. But okay, very practical. Okay, back to the presentation.
Yes. So I will just I don't know where we did lost you, but I will just continue where I thought it was the great where I thought we stopped. So I was saying that in the past, for the past 10 years actually, ARC has just the traditional insurance policy. And that drought insurance policy was only focusing on post-disaster response, where we were disbursing funds only after drought or cyclone or even cloud impact was materializing. And this, unfortunately, could arrive often too late for early intervention. So what we have done for 2 years now is that we have developed and we have partnered with UN OCHA to develop a model that release funds earlier. So this is what we call our anticipatory insurance. And this model is based on forecasted drought condition. The premium was fully funded by German Development Bank, a KfW, and we piloted for 2 countries, Zambia and Malawi. So it's important to note that these 2 countries also have the normal traditional insurance policies, and we have cases where we were on El Nino year, where the traditional insurance policy triggered a payout, but the anticipatory action policy did not trigger a payout. So the objective of our anticipatory insurance project is really to allow for loss and payout calculation well in advance, and thereby to enable early action that will reduce the potential peak impact following a large-scale shock. So it is designed to release funds early in the growing season, and it complements the traditional drought insurance, which provides support later in the season. And both work really in collaboration, hand-in-hand, and the goal is really to address all the food security issue we do have in these countries, ensuring financial support at different stages. So both insurance projects will that ARC use our internal risk modeling that we call ARV, so African Risk View. So this is risk modeling software that we have developed internally, and which is relying on the water requirement satisfaction index. So it's the WRSI that we look, and that model assess whether crop receive adequate moisture during the critical early growth phase. And if the rainfall falls below predefined threshold, then the model will trigger, the model will project high probability of yield failure. And for the AI policy, our drought impact is calculated based on the satellite dataset rainfall, estimated up to decade 2 after the end of the plenty window. So if I give you the example of Malawi, so the growing season, the sowing window is in January, and while the season ends in May. So which means the 2 decades after the planting window will be mid-January. So this is where we expect the AI policy to trigger a payout, enabling the farmers to replant before the season ends. And in simple terms, the drought impact was estimated using rainfall observation from the beginning of the season up to second decade of January, and the projection was used to finish the remainder of the season. So this is how we do our forecast. And some of the challenges that we have faced with the anticipatory insurance, the pilot ones, is really the delay in the satellite dataset. Because for Malawi and Zambia, they have selected a satellite dataset called CHIRPS, but CHIRPS has a latency of 1 month. While we really want also to disburse quickly, just 2 decades after, so that they can replant or do any action before the end of the season. But that latency affects the confirmation of payout triggers, and a slow data validation reduces the time window for taking anticipatory action, limiting government ability to intervene effectively before drought condition escalated. So another key challenge has been also before the government can purchase the policy, they have to develop with the support of ARC, the contingency planning. So they have their own contingency planning on part of the disaster risk financing strategy, but really for ARC insurance policy, either it's anticipatory action or for traditional drought, we really want to see which will be the activities that will be done if the anticipatory action trigger a policy, and if the traditional insurance policy trigger a policy. So it's not a duplication of effort, but we really see the value of these different policies. So another challenge that we have faced could be also the approval of the final implementation plan. Because before we can disburse a payout, we really want to ensure that everything is written, and this can take time, where the government now have the information with the latency, and then now to say, okay, this is the action we will do with the exact amount of payout that we will be receiving. So the process involves a decision on activities, fund allocation, distribution channel, and procurement. And so we can expect delays in terms of all the ministerial coordination. Other challenges is also the reluctancy from some reinsurance, from the reinsurance market actually, to pay for an insurance which is based on forecast. Because until now, it's easier to pay based on something that you have observed in reality, and that raises also some concern in terms of financial sustainability, and the fact that for now these pilot insurance policy have been fully funded by German government. Another challenge is really to see actually the willingness from the government to use their own budget to continue the policy once the pilot and fund available is over. So some of the action that we have put into a place and main lesson that we have learned from that is really to streamline and speed up the approval process also for FIP. So what we have done is really to conduct now many capacity building workshop and training session where way before the season starts, these countries can already know in advance what will be the activities they will do in case the anticipatory action trigger a payout, or in case the normal insurance policy trigger a payout. And also is really to do more fundraising again, where once the funds with German government is over, we know that we still have funds that can still help them. But great things, when we take the case of Zambia, Zambia has managed now to also put something from their own budget to subsidize the anticipatory action policy, so which is a great thing. And also one of the questions I think you asked is to know if there would be a payout finally, if there was a payout with the anticipatory action policy. So I told you it's been 2 years that we have developed that. The first year there was no payout, but the second year actually there was a payout for Malawi. So we think and we have confidence that this payout that government of Malawi received from the anticipatory insurance policy will also be like an inhibitor to enable to other countries to even take also the insurance policy, the anticipatory action policy to complement the traditional one. Thank you.
Yeah. Thank you very much for this super interesting presentation, and congratulations also to this pioneering work. I think it's really exciting what's happening in this space here, moving the frontier also of anticipatory action a bit forward. I've got one little question, if I take the privilege. Is the anticipatory action, the activities you undertake, are they part of the contingency plan or not? Yes, they are of the...
Yes. Yes, so it has to be part of the contingency planning
Mhm.
because in the past, since it was only what will be the activities done at the end of the season to help the people that will be really affected. But right now, there is also a section where we request the government to put what will be also the activities that will be done once you receive the anticipatory action payout. So some of the feedback that we collect was also, okay, it will help us to replant actually before the end of the season.
Mm-hmm. When you clarify also roles and responsibilities.
Yes, it's really important for us because we don't want a duplication or a confusion
Mm-hmm.
Between both projects, and we really want both projects to be complementary.
But they're both sold, but basically under one insurance policy.
No, they have two insurance policies.
Okay, that's also good. Are there any questions also here from the audience? I've seen this one in the chat, and Malika, you wanna go?
Yes, thank you. So I'm Malika, working with the IFRC. I had two questions. The first one is, you said that the payout is used for the farmers to be able to get the chance to replant seeds. So now what if the prediction for the next rainy season is also bad? Is there a possibility to do a different type of activities to compensate the expected crop loss as well? And my second question is, you said that the payout was given in Malawi. Do you have, were you able to follow up how the payout was used, and if indeed it ensured some minimum amount of harvest after this?
Okay. Thank you so much. So I can already take the second question. So the second question, the season is still ongoing, right? The Malawi agricultural season, but the anticipatory action policy is over. It's ending. It ended in January. So because of chirps, first that means the information regarding the payout value was known later. So that's one of the challenges because it was known in February. And since it was known in February, we also asked them, okay, to send us the final implementation plan before we can disburse the payout. So it's something that they have done. So it went process by process. So we disburse now the payout to the government of Malawi. However, the action that will be taken is not, we were not able to follow it yet because it's still on process, it's still ongoing because they only received the payout earlier this month.
Okay.
So that's really one of the challenges, and we are trying to see how can we also speed up and facilitate this process when we have a latency with the chirps, for example, because chirps, it's a good indicator actually, really great data set, satellite data set, but that latency is also a real issue. And sorry, and for the first question, they really have the flexibility to decide which activities they want to do. We just try to help them and support them during the phase of preparing the operation plan.
Okay.
We have one question in the chat. Is this data specific to a certain crop or in general? Maybe Dale, you want to come? Do you want to come in here?
Can anyone hear me?
Yeah.
Okay, so I just wanted to ask more of a curiosity actually, because I'm looking to maybe if this can be replicated in other countries and stuff like that. But you mentioned that specifically the data for Malawi that you showed, is it for a specific crop or is it like in general? Because I know like in a country there's like several. I mean, in a community there could be like in a country there could be different types of climate and stuff like that. So maybe is this like general or specific to a community or specific to a certain crop? So that's all. Thank you.
So for Malawi, the crop was really maize, because this is the majority of the crop that they request assistance for. But it's based on so what we do when we go into one country, we have the technical working group. So the technical working group it's composed of experts from the governments from the countries, and technical team also from the countries. So they will be the one that will advise which crop they want to insure, which parameters they want to select. So they are really they want customizing the risk profile, the region, even the region they want to cover. We call it like the calculation mask. So it's not something that we will impose to any country, and it changes from one country to another one. So if, for example, we have Togo, we also want to do anticipatory action. There, it could be how do we say? I don't. If we in Senegal, for example, it could be millet. So it could be millet. So it will really depend on the crop that the country want to insure. Even if it would be pastoralism, we can do that also. And I mentioned at the beginning that for now the pilot is really on crop, because this is what we have developed with OCHA for Malawi and Zambia. However, we are in the process of also developing a flood anticipatory action insurance with a Danish Red Cross in Malawi for flood in the region of Falembe. So the model is really at the early stage, because it's something that we are doing with the Ensure Resilience Solution Funds, where we have selected one region, and then we will see what could be the anticipatory when the payout could come, comparing to when the alerts comes. So it's something that we are developing. So just to mention, I don't know if it responds to the question, but it's really to mention that it will depend first on the hazard, and also the choice that the country has made themselves about the crop they want to insure.
Super, many thanks. Many thanks for the super interesting presentation. I hope we still have some time actually at the end of the session to maybe answer a few additional questions. But for now, I'd like to invite Akata Taito from UNCDF, the UN Capital Development Fund, to present on meso level anticipatory insurance in Fiji. Akata, over to you.
Hi, thanks, Nikolas. I can see okay, perfect. So thank you for the introduction. I hope you can all hear me well. Thumbs up if you can hear me well, or you can let me know if I'm breaking up. But having me on this session, joining from the Pacific, and really to share on the anticipatory action initiative that we are piloting in the Pacific. And as you had mentioned, I'm from the Pacific Insurance and Climate Adaptation Program. This is a joint program that's implemented by UNCDF, UNDP, and UNUEHS. But also for the Anticipatory Action Initiative, it's a joint collaboration with the United Nations Office for Disaster Risk Reduction, the Pacific Office. And also just acknowledging our program donors, governments of Australia, New Zealand, UK, Luxembourg, and India UN Development Partnership Fund. So if we can move on to the next slide, please. So the reason why we started looking at anticipatory action in the Pacific is when we look at the Pacific context, we know that globally, ex-ante climate and disaster risk financing solutions are emerging. And when studies have also confirmed that, if you invest $1 US in early actions or anticipatory action, this can lead to $7 of savings in response or recovery. And in the Pacific, there are limited to almost no ex-ante financial instruments. And even if this is existing in specific countries, it's mainly coming from the sovereign level in terms of government contingent funds or donor assistance and international humanitarian support that comes either during or after the event. And so we started to look at anticipatory action to improve communities' preparedness. If we can move on to the next slide, please. So in collaboration with the United Nations Office for Disaster Risk Reduction, we started to conceptualize the product. And we like to think of the solutions that we are implementing in the Pacific as evidence-based. So the product design consideration sort of looks at feedback from the communities, looking at what are the common perils that they are mostly exposed to, how are they currently coping with those natural hazards, and working with them to sort of identify needs and work together on what type of solutions would work best for them. At the same time, we were also looking at the supply side readiness to offer anticipatory action type of solutions and whether this fits within the regulatory framework. So in the Pacific, we realized during the process that anticipatory action alone doesn't sit well within the insurance regulations. And so having to work with the insurance companies and the regulators to co-create the solution at that time when we were having these conversations, we had just established the proof of concept for the parametric insurance product, and Gloria had done an excellent job in explaining what parametric is. And so we thought, you know, what if we are to embed anticipatory action to the parametric product so that we are able to test this in the market? So that was the approach that we took, but also looking at the demand side, and with the Pacific context, the market size is quite limited, and it doesn't work quite in favor of insurance companies and trying to keep in the premium cost low and affordable to the communities. And because we were having these conversations with communities, we realized that in the Pacific, they work well in terms of managing disasters and really the low intense or less damaging events. And the support that they really need comes in when the natural hazard becomes destructive. So community networks are already working well, but additional support is required when there's an extreme event. So we thought, okay, we can maybe perhaps use those existing networks, and instead of offering the product at the micro level or at the individual level, we could use the communities that are well established, where there's pharma agencies, registered pharma agencies or cooperatives, and they already have financial, non-financial relationship with their members. They know the communities well and are able to mobilize resources rather quickly. And the perils that were identified by the communities relate to sudden onset events like tropical cyclones or excess rainfall. And so when we're talking about sudden onset events, the window of opportunity to act and allow communities to prepare is relatively small. So we need to think of what is already working, leverage those existing platforms. If we can move on to the next slide, please. So based on that, we designed a product specifically tailored for Fiji, Samoa, and Solomon Islands. These are the 3 countries that we had focus group discussions with and started work on. In Fiji, we were able to pilot the solution in the anticipatory product in 2023 to 4 communities. And these are pharma agencies and cooperatives. There were no trigger events in 2023 policy period. And so last year, we expanded the cover to 12 communities, and that policy is still active. Again, we have not received any triggering events. For Samoa, we launched the product very recently, a week or 2 ago, and we added a rainfall component. So the anticipatory component only looks at tropical cyclone, whereas the parametric part of it covers rainfall. And in Solomon Islands, we're looking at launching this in the next month. So for the anticipatory component, this is based on data from the global forecasting system, and it pays out up to 20% 2 to 3 days before a cyclone makes landfall. And the percentage of payout varies depending on the intensity of the event. The remaining 80% of the total insurance cover is paid out to the communities after the event has passed, and is based on actual data, whether it be cyclone, as in the case of Fiji, or in some more excess rainfall and cyclone. You will note that whilst the sum insured is the same for Fiji and Samoa, the premium cost is different. And this is really based on the risk exposure of each of the countries. So Fiji has higher risk exposure to tropical cyclones, and hence the premium is slightly higher compared to in Samoa. The next slide, please. So this is just to give you an example of what the payout structure looks like. Giving the example of Samoa, I hope you can see it, and perhaps if not, the slides will be shared if you're interested, so you can have a look at it more closely. But the first table basically relates to the anticipatory payout. And as I had mentioned, it depends on the intensity of the event. So if it is a category 3, the communities receive about 10% of the total sum insured. If it's a category 4, 15%, and more extreme event category 5, 20% payout goes to the communities within that 3 days before the event makes landfall. And then the second table relates to the actual payouts that happen based on actual data once it has been verified by the risk modelers and the insurance company. Next slide, please. So this is just to give you an example of how the payout works. So for example, if you're taking a policy in September 2024, you purchase an anticipatory insurance product, and in January, there's a forecasted tropical cyclone category 5. And if the insured location is within 115 kilometers from the eye of the cyclone, the anticipatory action payout gets activated, and communities are expected to receive the payments within the 3 to 2 day window. The idea is that when the event makes landfall, the communities have already improved their level of preparedness, and there's less damages to their livelihoods or their assets. If there is any additional payouts, then that is made after the event, as I had explained. We do have a no regrets approach, meaning that because the anticipatory payout is based on forecasted event, we have to expect some diversions, and we have seen that in the past. So if there is a diversion, because the payout is expected to have reached communities and they have utilized that fund, they are not expected to pay the insurance company back. These arrangements are all included in the risk modeling process. And the policy period goes through the 12 months. So if there are multiple events that happen within the policy period, multiple payouts can happen up to the total sum insured of 50,000. Just to maybe highlight that we also understand that the payment infrastructure, when there is a cyclone, sorry, if we can go back to these are just additional information that I wanted to share if you have time to go through it. But if there is, sorry, I lost my thought there.
Sorry, 1 second, we're having some slide issues.
Yeah. Just on the contingency arrangement, because we expect that there could be some damages to infrastructure due to strong winds, and communities may not be able to receive the funds within the 2-3 day period, we do have contingency arrangements with the cooperatives and the farmer agencies. And as I had mentioned, these are well-established community agencies, so they already have funds that are available within their books, so they are able to utilize their fund with just by a message or an email from the insurance company saying that there has been an AA that's activated, you are entitled to this much payment. They can then use their own internal funds to start the preparedness activities, and when that transaction or the infrastructure is back on and the transaction can happen, they can then reimburse themselves. So that is also some of the arrangements that we have in place, given the payment infrastructures in the Pacific are not as well established, and we expect some delays or some network to go down and stop the payment from going through in time. So yeah, those are some of the backup plans that we have with the communities. Thank you.
Great, thank you very much for this super insightful presentation, and even super exciting project. We have now a bit of time for Q&A, and I see the 2 questions, 3 questions in fact in the chat, and I also would like to invite you, if you have any question here in the room, to make use of the time. So the first question comes from Chris from the Tier Fund. How did you arrive at a 2080 mix? Second one is from Dale. Has there been a case where the tropical cyclone undergoes rapid intensification after a payout, and what happens? And the last one, who buys the policy and how is it marketed? Yeah. Akata, do you want to come in here?
Yeah, thank you. So just to respond to the first question, the 2080 mix. The 20% was really derived from the feedback that we received from the communities. And because we sat with the communities to sort of come up with a budget of, okay, so you say that you need this much activities to happen 2 to 3 days before the cyclone makes landfall to improve your community preparedness or to strengthen your properties. So the budget that the communities came up with sort of equates to 20% of the total policy cover. And that's how we came up with the distribution or the split between what goes to anticipatory action and the payout structure that comes after. The second question, has there been a case where the tropical cyclone undergoes rapid intensification? Well, we've only piloted the solution two years ago. We started in 2023, and we are currently on the second policy phase. And as I had mentioned, there hasn't been any triggering event, so we haven't been able to test the anticipatory component or the payouts specifically for tropical cyclones. So at this point, I'm not able to really contribute to that question. And who buys the policy? It's a community or it's a meso product. So the cooperatives and farmer agencies that are registered and have good governance structures in place are the ones that buy the policy. And the reason why we sort of emphasize on good governance structures to be in place is because we need the decision to be made quickly within the management team on, ensuring that the funds go out to the communities or the households quickly.
If I may ask a follow-up question precisely on this, what does it actually mean to have a good governance structure? Like, what does the term entail? And are these the payouts then linked to predefined activities? Like the cooperative, did they develop a sort of a menu of options they could undertake can undertake with the payout?
So when we're talking about good governance structures in the Pacific, we basically mean that there's a line of authority that happens within the cooperative or the farmer agency. So there's if the funds go to the cooperative's books, there's someone that immediately approves the disbursement of funds to individuals or members that are registered within that particular cooperative. So that is sort of an important element for us to have, but that addresses the limited market size that the Pacific has in terms of ensuring that we are able to keep the premium cost low and covering as many people as possible at the same time. So it's one policy within registered communities. It could be around ranging from 50 to 500 members, registered members in one cooperative. And your second question.
Yeah, if this is linked to like an anticipatory action
yes,
plan or
we
framework.
Agreed.
Yeah.
There are pre-agreed actions, and the pre-agreed actions are derived from the feedback that we had with the community. So different communities have different priorities. So that is sort of entailed in the policy wording that the insurance company have with each of the cooperatives. And because the pilot testing is only with 12 cooperatives in Fiji, in Samoa with three cooperatives, so it's slightly easier for us to sort of test this solution in that manner. But ultimately, as we progress, we would like to see this, not having to be defined in the specific policy wording, but that communities are able to use those funds received before the event to improve their preparedness without having those predefined actions, because different households may have different priorities and needs.
So I have to take one more question here from the room. That was Malika, yeah.
Thanks. Yes. Hi, Akata. This is Malika from the IFAC again. It's two, but very quick question. The first one is the lead time is very short. Could you explain us where the money comes from and where it goes, and how do you manage to actually make the transfer happen quickly enough for the communities to really receive the funds in time to be able to use it? And the second option is that it seems to be quite at a community level. Do you have any plan to scale it up? Do you think that the system as is, or this pilot as is good for a national scale as well, or is it meant to remain at a smaller geographical scale?
Thank you, Malik. So to respond to your first question, the funds are being transmitted from the insurance company to the communities if there is a triggering event. Because it's an insurance policy, the registered or licensed insurance companies take on that responsibility. So they offer the product to the communities. And if there's a payout, the payouts are transmitted from the insurance company to the community. Or to our farmer association. So let's say, for example, Fiji Rice Limited. And your second question, sorry, I lost the second part of your question.
It was about the scale up.
The scale up, right. Again, going back to the limited market size in the Pacific, and I think Gloria also touched on capacity building. Parametric insurance awareness is quite limited in the Pacific. So a lot of effort has been invested in terms of raising awareness at the community level. So ultimately, as we progress with these new initiatives in the market, and the general public are more aware of the benefits of this type of solutions that are available to them, we can explore opportunities where the insurance company can offer to individuals as well as to cooperatives.
Thank you.
Okay, great. Thank you very much, Akata, for this super interesting presentation. Again, there's still the possibility to ask a few questions later in this session, but I would now like to hand over to Stella for a presentation of a little study that we are doing. And over to you.
Thank you, Nico. Can you please put up the slides? Right, so thank you. And so the MCII, MCII Munich Climate Insurance Initiative and the Anticipation Hub have been doing a joint study to understand how insurance can be adapted or adjusted to fuel anticipatory action. So using a comparative case study methodology, the study sought to really examine the existing use cases of insurance that are linking anticipatory action, and to see how they have adapted to incorporate AA principles, as well as to identify any key challenges, including technical, financial, operational hurdles that they have been experiencing, as well as the solutions that they have undertaken to address these challenges, and to highlight persisting gaps so as to propose pathways to refine scale, disaster risk financing instruments for broader AA applications. So the study was based on 5 case study that are spread across 3 levels, right? So the micro level, which is focusing on individual insurance premiums, but this case study was based on the World Bank Drive index-based livestock insurance scheme in East Africa. And then there's the meso level instrument. So we have 2 case studies under here. So one has already been highlighted by Akata, the UNCDF insurance that's linking anticipatory action in the Pacific. And we have also the WFP Guatemala focus-based insurance pilot, and the macro level case studies, including one that has also been highlighted by Gloria here for the African risk capacity. And then we have the PCRIC one, Pacific Catastrophe Risk Insurance Company. So that's the Pacific Regional Risk Pool. Next slide, please. So we have observed a number of interesting findings. You can, this is all part of a discussion paper that we're developing. And so more of the findings can be obtained from the study itself. But one of the emergent findings, interesting findings that we observed is the use of dual trigger mechanisms by insurance companies. So here with the dual trigger model, the insurance payouts are split in 2, and Akata and Gloria have already sort of highlighted that. So this is where you have 2 separate payouts that are activated by different signals. So the first trigger would be activated by forecast data, for example, predicted drought or cyclone, and then this then activates a small payout for early action, often between 10 to 20% of the total sum insured. And Akata has already given an example of that. And then the second trigger then will be based on the impact or the actual damage. And this then triggers the remaining of the payout for response, right, to the hazard. And this is usually then between 80 to 90% of the remaining sum. And so what this does is that it also helps with addressing the issue of trigger sensitivity, and also cost control, affordability, and also encourages, like incentivizes basically better response planning. So this is one of our major findings, but more findings will be in the paper itself. Can we go to the next slide? So there are several challenges also that were highlighted right across the case studies, but here we touch just on 4 main challenges that are common really across the 4. And then the first is to do with premium affordability and financial sustainability. So from all of the case studies, we observed that they are donor funded. So the insurance premiums are pretty much donor funded, they're subsidized, but without subsidies, really, it is unlikely that governments, cooperatives, or individuals would, be able to pay premiums long term. So this raises a critical question as to how we can enable, these DRF-linked AA models to become sustainable, beyond the pilot phases. And the second challenge has to do with trigger sensitivity and calibration. So here, basically, so from the studies, we observe that it is tricky to find that right balance where you find the right threshold for early for early payout, because if you have low triggers, that could result in frequent activation and frequent payouts, increasing the premium price. And then if the trigger is too high, what this means is that it could result in early action not being possible at all, because it means that the trigger would activate under extreme conditions. So then that then hinders the early action payouts. And so this is a technical challenge that we observed right across the case studies. And the idea really is to find a balance, right? And so the dual trigger mechanism is one of the solutions that is used to also help with the trigger sensitivity issue. And then the other challenge, the major challenge that we notice right across, is to do with delays that are caused by bureaucracy, and weak institutional, responses, operations. And Gloria has already given examples of, how this sometimes happens. And so even when a trigger is met, so delays then can still take place in paying out early. Delays in approving implementation plans, and delays in coordination, even between departments within agencies. And then what this does is that then it erodes, the value of acting early. And the last challenge here is that to do with trust and awareness of insurance. There's a lot of skepticism about what insurance is, especially parametric insurance. It is not really well understood by individuals themselves. It's not understood by the humanitarian sector. So there's that need to really explain what it is and to co-develop solutions. And so I think this is touched on in the next slide. So if you can move to the next slide. So in the study, so the key challenges that are highlighted, as well as the recommendations based on what we learned from the different case studies. And on the issue of premium affordability, then we recommend the use of smart subsidies, but we want to really hear from you here in the room and perhaps online, that what could these look like? What could smart subsidies look like? And also the use of blended finance is one option that could help with premium affordability, beyond just the subsidies, obviously. And we spoke about trigger sensitivity. The dual trigger mechanisms is one way of offsetting that, but there are also the use of data, high resolution data, and AI-driven analytics is another way that has been used to help really with the triggers and the model accuracy. And then for the institutional and operational bottlenecks, pre-approved action plans, Gloria has already touched a bit on that. Or, going forward, that it's one way to reduce the delays in the payouts, and pre-contracted supply agreements, integration into existing DRM structures, really integrating AA into existing DRM structures. It would be one way of already ensuring that it scales beyond just the pilot phases, and leveraging social protection systems. The WFP and PICRIC examples show how this could actually be done, because then this already, it helps with the payout system if the AA linked with insurance already embedded in the existing social protection systems, and then it makes the payouts faster and trackable, because you're able to track so who has been paid. And so yeah, it's one way of doing that. And then trainings and drills. Like I said, insurance is not well understood, and so there is need for capacity building, so trainings and drills between the insurance sector and the humanitarian sector, so that insurance is better understood and integrated into anticipatory action. And so that also touches on the aspect of trust and awareness, participatory designing the model together. And in Fiji, I think Akata may have already spoken on this, like how they came up with the 2080 mix is because they already had the discussions with the cooperatives and the communities. So to design the models together, so that actually increases the trust in the product and better uptake of the insurance linked with AA, as well as the financial literacy programs, and some independent legal advice. So they know, because then there's other aspects to do with basis risk. This is where the insurance doesn't actually trigger, but there would have been some event. And so it causes a lot of, mistrust, as well as sometimes disagreements, between the insurers and the policyholders. So these are some possible solutions, as well as practices that are already being implemented. Next slide. Comments and suggestions. So I think now we have it over to Emily.
Okay, that's it. Thank you very much. Yeah, I mean, just a little caveat. Of course, this is the paper we're writing is it's basically a think piece. It's of course also tricky to infer or to create generalities based on 4 or 5 cases and so on. But I mean, it's really an emergent field, so it's really like we're trying to make sense of this, and we're trying to try it in this paper to identify some common patterns, but common patterns, common challenges, and hopefully also with you, also in particular this online, common solutions. And on that note, I would like to invite now Emily Montier for a quick reflection on her take on the opportunities that come that you've seen, but also on the proposed solutions that we quickly outlined here, and we'd like to develop further over time. Emily, over to you.
Thank you, Nico. Thanks for inviting me onto this. I mean, I think such an interesting session, and the examples have been fantastic that were presented. Yes, as you invited me to provide a few comments, particularly on the challenges and solutions, and maybe just to start a little bit, as you said, with the opportunities. I mean, I think really, as we can see from the examples, there's a huge amount of opportunity in linking DRF and anticipatory action. So first thing, just to zoom out a bit, it's useful to think about DRF instruments and DRF as really being about much more than just insurance. It's about taking a structured approach to essentially trying to quantify the financial requirements of future crises, and actually then organizing the funds that are needed for disaster assistance ahead of time, and using a range of different instruments, of which, of course, insurance is one of those. If we then kind of go over to the anticipatory action space, AA systems are really well adapted to DRF, because actually a lot of AA projects or systems are actually investing in data and triggering models ahead of time. They're defining ahead of time what are the particular kind of hazards that are of focus, what are the danger thresholds, what are the actions that need to be put in place very quickly ahead of these crises mitigating. And therefore, and also actually pre-arranging finance to ensure that it's available when needed for those really short windows of opportunity for AA. However, obviously, historically, especially in the kind of emerging period of anticipatory action, often that pre-arranging of funds has just been, putting some money in a contingency fund. It may be having contingency budget lines in a particular AA project like crisis modifiers or others, but not using particularly kind of sophisticated techniques or thinking about the range of different financing tools that could be used to actually pre-arrange those funds effectively. So there's a real opportunity there that the AA community can benefit from all of that knowledge on disastrous finance and arranging funds efficiently that are in the kind of DRF space. But equally, the DRF community sometimes is not as strong on the money out systems. So actually ensuring that funds that are released from these financing instruments reach the most vulnerable people in a timely way in the most vulnerable places. And actually there's a huge amount, therefore, that the anticipatory action community can bring on that side, on the kind of money out element. So, however, as I think the report flags and the different presenters have flagged, there's a real challenge in that I'd say both sides see the other side as quite risky. For example, on the DRF side, I was involved in a project recently where working with the Ministry of Finance, where they're setting up a flood kind of insurance protection that will release funds to go automatically to households that are affected by floods. And the question was raised early on, well, why don't we organize this insurance mechanism so that it triggers actually ahead of the flood? And it was felt to actually be, that would be a very risky enterprise for this project. What if it doesn't trigger at the right time? What if people receive money when they don't need it? Would the local insurance providers who are involved in this scheme actually accept this kind of approach? So there's a lot of kind of barriers there on demand side and supply side. And I think examples like, I think the one Gloria gave, working in Malawi on kind of flood insurance, I think will be great in terms of generating experience that will increase people's levels of comfort with that. I think on the other side, in the anticipatory action community, insurance can be seen as really risky. I mean, I remember when I worked at Start Network and we were buying our first insurance policy from ARC, and, the big debates with the board and with others about what if we pay this premium, the money doesn't come as we expected, looking through the legal contracts in huge amounts of detail, all of these kinds of aspects. So there's that kind of perception on both sides of risk and of that needing to be addressed. So I think the case studies in this report point to some really practical ways that can be managed, like this dual trigger structure, like premium support by donors. I think just one final point, and I think it's around this question of affordability. And perhaps this didn't come out as strongly through some of the solutions, and it just occurred to me that actually, there's also that recognition that different types of financing instruments are good at different things. So, for example, insurance is great for risks that don't happen very frequently, where you need large amounts of funds, and actually holding those funds in reserve can be a huge opportunity cost. You end up kind of stockpiling funds through your contingency funds that you don't need for anticipatory action kind of systems that may trigger or not trigger. And actually best practice in disaster risk finance is actually to layer your funds. So you use different instruments for different sizes of risk that require different volumes of funds. So in terms of solutions, in Start Network, when I used to work there, they obviously launched the Start Ready mechanism that has these two layers. So there is a global kind of pooled risk pool, essentially, like a contingency fund, that can provide that first layer of risk, providing the rapid funding to fund anticipatory action across different countries when it is required. But then obviously there's always a risk that actually all of these different systems will require funding in the same year, and it may deplete the funds. So actually purchasing reinsurance to then actually make sure that the fund is topped up or is able to still keep paying out when it's required. So I think that's another way when thinking about affordability and other issues is thinking not just about areas like premium support, but also layering different instruments effectively so that insurance or other tools are actually used for in ways that are most financially efficient. So just maybe the last kind of sum up is, I think, particularly if you're an AA practitioner and you're sitting in the room and you're thinking, how can I use insurance or how can I adapt to insurance for my work? I think actually kind of the broader question of like, how can I use all that learning and that best practice from disaster risk finance space as a whole, thinking really concretely about what finance is needed, when is it needed, how regularly, how quickly, and that helps in kind of informing which are the most appropriate instruments to actually pre-arrange the funds that are needed for anticipatory action systems. But I'll stop there because I think I could talk forever on this. Back over to you, Nico.
Great, thank you very much, Emily, for this fantastic reflections. Shona, if you could bring back the slide with the challenges and the proposed solutions, recommendations. Yeah, I'd like to now to bring in you, basically, like you here in the room and also online, and now a bit, yeah, to tap a bit into your expertise and experience on linking AA and insurance. I've seen, I think, was it Chris from Tier Fund. Apparently, Tier Fund has also a project I wasn't aware of, at least, of AA in linking insurance and AA in Malawi. I'm keen to learn a bit from you if these challenges outlined here and recommendation, if they somehow resonate, what your experience is, how you are trying to overcome them, or if you're still facing them, that would be wonderful.
Yeah, thanks. No, I think I completely recognise the challenges that have been outlined. I think for Tier Fund, we only recently signed an insurance policy for kind of a pilot, really, for several districts in 4 different countries across Africa and Asia in December last year. And then there was a drought in Malawi, which was sufficient to trigger a payout just in February, which was really obviously not great for people in Malawi, but very good for the pilot to actually test and see. So we're in the middle of implementing that. But to be honest, the biggest challenges we faced have largely been internal ones of, why should we as a non-profit international NGO be giving money to the private sector for a service we may never receive a benefit for? If you're talking about an insurance policy, which maybe only pays out 1 in 10 years, that's, 9 years of no benefit. And so trying to convince senior level people, how insurance really works and how it protects our long-term development work and people's long-term, I guess, adaptation to climate change in a lot of ways, isn't it? For this, I think, for us anyway, has been a real challenge. So that kind of
how did you convince
level buy-in, really?
How did you make the case, if I may ask?
Multiply and often, probably hundreds of times, and bit by bit trying to hone the cost benefit, trying to get better evidence, trying to find ways for particular people to convince them in the language that they would hear and understand. So a lot of one-on-ones as well as, rooms full of people. So getting better at it, but it's never been easy. And part of the challenge is anticipatory insurance is not the same as maybe, insurance at the end of a risk period where you average across the whole lot, and then you might get a payout after it gets calculated. So for the anticipatory insurance that we've been working with, it has several trigger levels, and the earliest of which actually, certainly for the Malawi case, paid out a month and a half before the maize harvest. So we had sufficient data to generate a payout, but that makes it way more complicated. And then trying to explain that complexity makes it more difficult. So anyway, long answer, sorry.
It's from which organization?
From Tier Fund. Yeah. So anyone else who wants to come in here? Maybe here in the room? Again, yeah.
No, just to find out, this is very, very interesting for us. In the AFRC, we have an insurance mechanism for the draft, which for now covers only response. We've been having discussions with our insurer to cover or not the anticipatory pillar. There were 2 options of way forward, because currently the response covers weather-related hazards only. Yet in the draft, we also support responses for non-weather related hazards. So there were discussions in February on whether we should increase the insurance first to cover non-weather related hazards from the response, or to give it a start on the anticipatory action. Because of all the discussion, we all felt safer to first go for the response on non-weather related hazards than on anticipatory action, mainly because of issues we have with our current trigger model, and the fact that we are not yet very convinced on the efficiency of the current trigger model. It's very complicated and it doesn't trigger as often as it should, and we believe we have to simplify it. So for the insurance to develop something quite complicated on a model which may not remain exactly as it is. For now, it's not very, yeah. So anyway, sorry, a very long introduction for actually a quick question. All your models are on weather-related hazards. So I wanted to know if among those pilot and discussions, if you are also thinking about expanding those kind of pilots to non-weather-related hazards, thinking about displacement or epidemics, for instance.
So we do epidemics on our side. We do because on our side we also have an outbreak and epidemics trigger or project covering. So for now, it's just the government of Senegal that have it covering meningitis, like Ebola risk, a disease. But the government of Rwanda is also able to take it because they had faced a significant Marburg epidemic recently. So this is something that we are doing so in a separate way. But even again on outbreak and epidemics, we have the West African Development Bank that's also taking something on behalf of many countries. But it's just that the policyholder will be the West African Development Bank, and they are not just covering outbreak and epidemics, they mixed many periods together per country. So in case weather event did not trigger, then we know that we have also the risk of epidemic. And for the others is weather related event. However, what we did with UNHCR, so we are still trying to link the weather with the impact on displaced people. And what we are doing now is with International Rescue Committee. We are also trying to link actually. So we are trying to link to go to other sectors that are not just agricultural when it's crop, for example. So with International Rescue Committee, we have just developed with them an insurance policy that will see the impact or see the impact on drought or flood on the school disruption when students supposed to go to school and then they can't because of any event. So for now it's still related, but we are also trying to innovate from our side. So maybe one day it will happen.
And the ones on epidemics is for anticipatory action as well.
No, for now because for now it's WHO, yes, WHO will notify us for now on cases that really happen. Okay. So there was no request yet for anticipatory action, but for example, if we have an organization that can, because the request did not come actually, but now that since we started the anticipatory action, we are seeing like the value and the interest in many organizations we are working with. I think it's just because we haven't received the request yet.
Okay, thanks.
I could also actually a question to panelists taking up a comment from Emily. What is actually the return period of the events that are basically insured via the anticipatory insurance in the case of ARC, but also in the case of the Pacific?
Okay, I can start.
Yeah.
So for ARC, for drought, because the anticipatory action one existing is on drought, it's the same as the traditional policy, which is 1 in 4 years. But the 1 in 4 years is just that it's still, of course, expensive because you are insuring against something that can happen every 4 years. But we are giving the possibility to all the countries to revise the customization every year. So I can tell you, just when you take Malawi, of course, the anticipatory action one just triggered this year. So let's wait and see for future. But when you take the normal one, they receive 14. So the premium that the government of Malawi is paying is around 3 million. So 2 years in 2022, they paid 3 million, they receive a payout of 15 million, like 14.5 million in last year. So 2022, they received 40 million. 2024, they received 16 million. And this year, the season is still ongoing, right, for the traditional one. So I can already tell you that within 3 years, I mean, every 2 years, even if the model is designed to trigger every 4 years, every 2 years, they are now receiving a payout, which is more than 3 times what they are paying. So the value is there. Of course, it also has an impact on our pricing and our capital. But again, it's going with the mandate, because I know in the finding, there are a lot, and even yesterday when I attended some session, there are a lot of non-confidence or non-trust in insurance, because we are still seen as also private. But on our side, we really try to respond to our member state need. So we don't price as maybe the private organization. It's just when we revise our pricing is also more to make sure that we are still sustainable, because this is something also important. Otherwise, in 2 years, we won't exist anymore. But yes, so 4 years, but for now, we trigger every 2 years for Malawi.
Okay, thanks. Akata, over to you. What's the return period in the case of the Pacific?
Yeah, so for the Pacific, when we're looking at tropical cyclones, it's sort of intense events. So 1 in every 5 years. We've had 2 recent events, but it's at category 2 level. So that didn't, earlier this year, so that didn't trigger a payout because the anticipatory component, it has to be a category 3 and above. So for category 3 and above, it's 1 in every 5 years.
Okay, great. Unfortunately, we're running out of time. Is there one burning last question? No. Okay. Then thanks so much for joining this session. I think there is still a lot to talk about. I think at least that's my takeaway from this session, but also from the study we've investigated, that we're still not communicating enough, or there could be more exchange, in particular between development sector, humanitarian sector, private sector, and to better link, risk financing, disaster risk financing instrument in general, and particularly to the delivery system, basically the money out system. I hope we can continue, or I'm sure we will continue the conversation in a different place. Thanks again for your time and your contributions, Gloria, Emily, Akata, and also to you, dear participants here and online, and have a good afternoon. Bye.
Thank you.